morning, everybody. It's Friday, April 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had May corn down a quarter at 440 3/4. May soybeans were down 4 1/4 at 1158 1/2, and May Chicago wheat's down a penny and a quarter at 601. The personal expenditures index was out this morning. It's a key inflation indicator that the Fed uses. It was up 2.8% from a year ago. It was slightly higher than what the estimates were looking for. So just more, I'd say, negative news on the inflation front as more and more reports continue to come out. Guys, nothing else really in the way of fresh news. We've got a weather system that's starting to develop, kind of rolling through the Midwest. Certain areas are getting some pretty good rains as they've been calling for. We'll have to see what, obviously observed precip ends up being. But outside of that, you got option expiration here today. We'll kick it over to Dustin. I know you want to talk about just a couple of key areas that we were looking at with open interest in the options. And then we'll move it around the room and get everybody's final thoughts for the week here.
Yeah, thanks, Dan. Yeah, for option expiration today, it's the May 24 CBOT contracts, but corn is a big one, obviously, usually to watch. And it's really kind of a flip universe from the option expiration we were discussing back in the March timeframe, end of Feb, where we had a ton of in the money puts that were going off the board, and it was we were definitely in the higher percentage of total open interest was going to be in a net short futures position from the long option holder back then. Now we're way more neutral. The majority of open interest is going to be right around that 440 strike, right where we're trading, and so there's a good chance we kind of hover in that area. Overall, the net numbers are net long calls that are in the money, including the 440s, are 40,854, and the net in the money puts are 28,081, and then that flips quickly as you go back down below 440. So, if anything, if the market kind of holds to what it's done in the past, it tries to stick near that that really heavy option expiration number right around that 440 strike.
It's kind of uncanny how it works out that way every time, doesn't it?
Not always, but it's just something to kind of, have that as a bias, I think.
Yeah, sure. Anything in the bean side, Dustin? Are there any key numbers on the beans or?
Bean option of interest not as big for May either, so I really don't see a major option move coming from the May contract right now.
Okay, very good. We've talked briefly about on the livestock side. This we've got certainly there continues to be more and more cases on the bird flu side. I think we're up to 8 states, but it was announced overnight that there had been rumors, but Colombia did restrict imports of beef. Now, as a caveat, we're talking about a $10 billion export market, and they account for about 39 million. So it's very small scale, but Ryland thought we'd get a couple of thoughts there now that the kind of that rumor has come to fruition.
Right. So the rumors were pretty much true, but the market looked to price it in right away. I mean, if it was a much bigger player in the market, I think it would be more significant. The question is this going to lead to more countries reevaluating their import purchases? So, I mean, like anytime you hear that demand's going to back off, the market's going to panic because there's a potential domino effect, right? But at this point, I think everybody just wants to know more, wants to know how the industry is going to handle this, how the protocols are going to be set up. But right now, it seems like it's kind of an extreme reaction to something we know little of. Obviously, some regions are going to be pretty guarded as to what they take in from a country that has no disease issues. So it could be a snowball, it could be a one-off. We just don't know enough at this point if anybody else is really going to follow suit. And we had a big reversal yesterday, just for whatever reason. It could be a bunch of reasons, but overall, it seems like the market kind of brushed it off at this point.
Okay, no, that's very good. Justin, we are due next Tuesday to the Biden administration is going to expected to release their model for the SAF subsidies. As they've started to dig deeper and deeper, things are coming out about what could possibly be involved: use of cover crops, efficient tiling, efficient fertilizer application. And I guess Reuters published a story that is projecting that it could possibly be more restrictive for corn ethanol than originally thought. So I know, obviously, until we see the actual write up, I guess maybe just a few thoughts on the top of it. What has the market priced it in? Things like
Yeah, I mean, it's a tough question because people that are building the facilities to make SAF and some of these things, they don't know yet.
right.
So they're kind of going with what their the flow of information is. I mean, they lobby pretty hard. They're in the know, and they're kind of day to day on that knowledge. I mean, it is an election year, so I think it would be weird if it came out with super restrictive policies that would upset any potential voter base right now. Even like when we talked about, came out with E15, kicked it to 2025. So question is, do they do something restrictive that starts on a certain date? I'm not sure. I would think it would be mostly neutral, just because it is an election year. So whatever that's worth. But like I said, the people that we talk to that are kind of in the space are kind of in the same page. Like, what, you gotta wait and see how this all unfolds.
Yeah,
the only thing I would say is, I think it's going to happen, and there's a lot of money being poured into SAF and all these types of things, and it's also energy companies. It's really big lobbying groups. Obviously, there's always a green push going on, so I think eventually it's going to probably be pretty favorable for U.S. growers. So that's the optimist in me. Yeah, we're also Bears fans, so.
It was a great night.
Always
optimistic.
Great
night.
That's for sure.
I never woke up feeling as good about being a Bear fan as I do this morning.
That's scary. It's like
It's
being bullish wheat. Yeah.
So. Yeah. No, I guess speaking about, you talk about being bullish wheat, but obviously, Justin, I'd say going into, you made reference yesterday about, potentially kind of the first weather-ish type of weekend. What's your take as we wrap up the week?
Well, we've talked about it a bit. We're, 50 cents, nearby corn, 50 cents off the lows that we saw in March. So we've had a rally. I think it's hard to argue that we haven't rallied. So we've had a nice recovery. I think basis levels have been perking up. Reasons for that, right? We had a good stocks report and acreage report for corn that was friendly. Our export pace has been steadily strong week after week. We're to the tune where we're at record pace for, certainly to Mexico. And overall, like, you could argue that when you do adjust higher, the government's numbers for sure, the stocks number implied that we fed a decent amount as well. So there's, certainly some friendly things here, especially if we were to have a summer, corn market export program. So, we also talked about this, where sometimes you get small doses of friendly information that adds up to, something a little more decent. So we're just going into the weather market. You have to be really open-minded, in my opinion, here, because I think you could write a scenario where, weather pattern turns good. We've recharged some soils in these drier western areas. And if we have a good weather pattern, maybe you pick up some acres, you could be in a very burdensome situation come fall. You could see sub $4 corn pretty easily, in my opinion. And to the other side of the coin, the friendly number that we did get on acres, we keep doing a good summer export program, and some of these biofuel things pass, and God forbid we actually lost acres on the June report for corn. It's just it's a big difference in what that price outcome is, not to be Captain Obvious, but I think you're just kind of you're a fair price level here for what we know today. And I think you have to assume that you could be pretty easily, especially if you look at D's corn at 475, probably have $1 risk either way. So I do think the world picture is probably going to be hard to be a $6 corn environment come harvest, but between now and then you could have some sort of, 520, 530, 540 type price level. Wouldn't surprise me if we had problems. So
Yeah, that's a good point. Don't be passive. There's, like you said, it's understanding what that dollar move each way is going to absolutely mean, and then having some sort of a plan or a pathway forward, right?
100%. And that's same on beans, I think, even to a bigger degree. And, Dustin talks about this a lot. It's, you have to have that plan B in place now, so that if, you have the opportunity, if you do have some weather problems and you get that big run up, that you can take advantage of it. But if, weather just turns good and you don't want to let, a pretty good price, even though costs are high, I get that. But, July 25 corn, for example, is 505. That's been a relatively high price over, the last 10 years. Even though we have traded 7 and things like that, but
Sure.
So.
No, that's good stuff. Right. You touched on it briefly, but why don't you wrap up the week on cattle? What's your thoughts?
Yeah, we had a massive kind of reversal yesterday. It really seemed like Packers came after cash. Most of the trade in the South was 182, some 184, but in the North they were paying 2 to 4 higher. On the live side, 184 to 185 and 294, 295-ish in the North for dressed. So I mean, you kind of traded a week's range in one day. And it just seems like you alleviate a lot of the concerns that we've been hearing about that kind of headline trade, with all that's going on with bird flu. And I think people are really trying to draw a direct relationship between the beef supply and what's going on. But right now it doesn't seem to be affected to a large degree. I mean, there was massive jump in dress weights yesterday. They were up 922 pounds. So, I mean, this is a massive headwind, I think, that the market's going to have to deal with. And it just seems like weather's been pretty conducive. Feed is cheaper. Maybe the feeding process is a little bit different to keep, cattle on feed a little bit longer. So, I mean, if that's the case, I mean, it does seem like there's a bit of a ceiling here for right now for what we know with the headwinds that are in the market. But yeah, I think we kind of wrapped up the week here. I wouldn't be surprised to see, things kind of level off. But coming into next week, it's going to be first notice day for April. So all eyes are on June and the basis right now. We'll see how that kind of shapes up. As far as the hogs go, we had the cold storage report. I think everybody kind of looked at the bellies and said we're a little, there's a little bit more of a negative sentiment just because you're kind of right in line with a year ago and you added quite a bit from March. So we are looking at, a little bit weaker cash yesterday. Cutout kind of stabilized. And I think just overall, it looked like the board was just kind of getting away from where the cash is at, and the big drop in cash yesterday, I think, just kind of stopped the price action dead in its tracks. I mean, June did hold the 20-day moving average, so we'll see if there's going to be any further support right now. But it just seemed like you got a decent chunk of liquidation on that news. So all eyes are kind of going to be on price action early next week, and see if bellies can't find some support here next week.
Very good. Appreciate the update. It is Friday, which brings us to Fun Fact Friday with Brian. So who knows what he's got for us? We're always surprised. Take it away, Brian.
All right. Thanks, Dan. Happy Friday, everybody. I might be aging myself a little bit here, but without further ado, Jack, cue the commercial.
Mr. Owl, how many licks does it take to get to the Tootsie Roll center of a Tootsie Pop?
A good question. Let's find out.
What was that? So yeah, I'm going to prove Mr. Owl a little wrong here. So there's been a bunch of experiments taken. So it's between 144 and 1,000 licks was all these experiments. But then along came the Purdue University engineering students developed a licking machine modeled after the human tongue. And we got that thing narrowed down to 364 licks. So what can Purdue do? So
licking machine.
One a day. All
right. Yeah.
The more you know. So we're keeping it light today. Hope everyone had a great week.
Very light. Nice, Brian.
And that was not practiced, I'll tell you. That was okay. Like I said, we never know.
Slow day, apparently.
Yeah, apparently, yeah.
What's up, Boiler Liquor? I gotta wrap this before it gets off the chain here. All right, May corn is down a quarter, 440 3/4. May soybeans down 3.5, 11.59 1/4. And May Chicago wheat's up 1.5 pennies at 603 3/4. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend, and we'll look forward to talking to you next week. Thanks.
Yeah, have a good weekend.